Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. Disclaimer, this is not to be intended as financial advice. This is just my opinions on markets and market movements. If you are going to invest, make sure you do your own due diligence and consult an advisor. Do not invest off my video. Anyway, let's get into today's or yesterday's. I was tired, had a long day from work, and I just didn't have the energy to do a video. Had a lot of other things going on. So let's go in today's, and I have a couple of things I just wanted to share also. So let's see. Share my screen. First of all, yesterday's economic data. You look at this S&P Global PMI 54.6. That is a strong reading. That's probably where a lot of the government spending goes to, corporate, warfare, welfare, and then they make a lot of and then existing home sales. If you look at it, declined 7% month over month. On the surface, that looks bad, but if you look at it, expected 4.1, the number 4.11. So that beat expectations. So the market's going to view that as positive. And one of the things, the leading economic indicators, this is 50% or half a percent. It's like 50 in the previous. If you look at it, all the leading economic indicators, CB, let's see, for some reason it will not let me, when I click, go to, normally it used to it used to let me, let's see. Yeah, it wouldn't let me, but it used to tell you the leading economic indicators and whatnot. And so let's see how the markets react. Look at Dow Jones, that's up only 15 points. The S&P finished negative, Nasdaq finished negative. I guess good news is bad news, who knows? But the global PMI, if you look at it, just shot down and then started going back up again, and then just isn't a strong move one way toward the other. My opinion, this is an election year. It should be good for the markets. And if you look at it, they view this as strong economic data because the treasury is going up. The interest rates are going up. So good economic data. Uh, I would say the market isn't sure because does it mean inflation's going up? They believe high inflation could also be high economic data or whatnot, but they do view it as good economic data. The algos are probably on. Strong economic data probably means higher interest rates. They probably haven't fully reprogrammed the algos. And I want to get into a couple of things here. I was like finding this up on the housing market. Home foreclosures are on the rise again nationwide. And before I get into this, I just want to say I hate how they're like, "Oh, you didn't call a housing crash this year. Uh, you were wrong. Being early is just as bad as being wrong." Like, no, it's not. And no one said this to me. I'm just saying, so this has been said to other. And as you know, if you follow my videos, I said a housing crash is coming. I never said it was going to be here yet. Uh, but housing, it's not something you can just sell and you're gone the next day, and it's off your personal balance sheet. Like, housing takes a while to sell. It takes a long negotiation. Houses can be on the market for a while. So in this market, you have to be early. You can't be there's no such thing as timing it right, because if you try to sell right before the housing crash, then you're guess what? It's on the market. There's houses on the market right now that are on for 6 months. There's no bidders. Then they take them off the market, hoping that they would come down. Uh, you have to be early. And even if housing goes up another 10 or 15%, It's not like you can get rid of it quickly. So you have to be, so there's no such thing as being early and wrong. Uh, and so if you buy a house now and it crashes in 5 years,
GoDaddy Arrow creates a
what
logo,
is this?
website, even social posts in minutes.
That's what I hate about these articles. They have these stupid videos in them. People don't want to read anymore. So, but yeah, you have to be when it comes to housing because it's not as liquid as people think. You can't be too on time. Uh, so anyway, home foreclosures are on the rise because before the index show a house, the crash could have already been taken place. But if you look at it, home foreclosures are on the rise again nationwide. And this was published June 14th. So this is not an old article. Uh Home foreclosures rose again as many Americans continue with the grapple with the ongoing cost of living crisis. Now, this is basic economics. Inflation's always followed by deflation. If you inflate the economy, it's going to deflate eventually. New report published by real estate data provider ATTOM, whatever that is. That marks a 3% increase from the prior year, although it's down 7% from the same time last year. So, they're trying to, they really think if they report it differently, the housing market won't crash. How they report it can determine a housing market crash. So, May foreclosure activities highlights nuanced shifts in the housing market. So while we observe a slight increase in foreclosure starts, the decline in completed foreclosures indicates resilience in certain areas. So yeah, there is some resilience, but as I said, this is a bottom-up crash. How many times have I said it's the weakest, most speculative with they're gonna go first, and that's how it always starts. Oh, it's contained. It's just that area. Oh, those are the plebes. They're just dumb people. They're crashing because and then it just spreads. And I'm just making fun of the elites or the upper class uh on that. One in every 4,320 housing units had foreclosures filings in May. But the problems were worse in several states. New Jersey had the highest rates of foreclosures. I'm not surprised. The problem could soon get worse as home prices, steep mortgage rates, property taxes, and rising insurance premiums. And see, this is the thing. The mortgage is fixed, but new mortgages, not everyone bought in 2020. There's people who bought in 2023. There's people who bought in 2022. There's people who bought in 2021. Mortgages, I don't think were that high. But it's also the reason why there's such a lag is the mortgage is fixed, but everything else is going up. And so what a lot of people have done to cause the lag is they've cut back on like going out to eat. They've cut back on entertainment. Maybe instead of going on 2 vacations, they go to one. And so a lot of that discretionary income, so that's created a lag. So they've still been able to pay basic expenses, but their discretionary budgets have shrank. And then we're going to see, I mean, we already saw layoffs in tech. It just wasn't reported in the BLS. And that's when people will eventually say, maintenance costs, the maintenance of home, HOA fees, all these things are a lag, and then eventually people start selling their homes, or they might default on their mortgage. They might lose their job. So I don't know if there'll be many mortgage defaults, but it's a lot of the other things. And then there'll be a lot on the market, and the consumer. I mean, I know a lot of people buying a house said, "I'm not interested in buying a house until there's a 30% correction." They don't realize how poor Americans are. America's a poor country. That's what people don't realize. It's not a rich country anymore. It's a poor country. Not '08, but the reaction of '08 to 2008 made it a foreclosure. So, so several reasons to blame the affordability under building fuel shortages of homes. Well, a lot of inventory has exploded, so that's not true. And then there, of course, typical higher mortgage rates. It's high prices. Even if mortgage rates were at zero, most Americans won't be able to afford it. All the new jobs created since I think 2019, none of them went to Americans. Uh, and that's BLS numbers. Yeah, economists predict that mortgage rates remain elevated, that they'll fall once the Federal Reserve starts cutting rates. Well, they're supposed to cut 6 times this year. How many do we get? So, when will they cut? No one ever knows. So here it is. Most homers say they're twice as willing to sell their home if their mortgage rate's 5% or higher. That means when the Fed cuts rates, there's going to be another explosion of inventory. Currently, about 80% of mortgage holders have a rate below 5%. So lowering rates might lead to a crash. So I think eventually, because a lot of people are, things are going to be really bad. But so yeah, and then this is another one right here. Foreclosure stats. This is starts increase nationwide. A total of 6,000. Let me highlight so you can. Total of 67,657,000 U.S. properties started the foreclosure process in Q1 of 2024, up 2% from the previous quarter and up 4% from a year ago. There you go. And foreclosures are starting to. U.S. foreclosure activity increases quarterly in Q1 2024. So right here, just copy this and Google. Let's see if it actually find it. So here you go. These numbers up and atom. So if you look at it, you'll be able to find it somewhere here. Right there. See right there. So want to know where do you find the article? It's right there. So ATTOM, a leading curator of land, property, and real estate data, today released Q1 2024. So there it is. Foreclosures. Now look at this. US foreclosure starts. Look at this drill. Trying to find. So this is Q2 of 2022. And you can see it's just starting to come up. So these major metropolitan population of 200,000 or more had the greatest number of foreclosure starts. New York, New York, Houston, Texas, Chicago, Illinois, Los Angeles, and Miami. Highest foreclosure rates, Delaware, New Jersey, South Carolina. So yeah, if you look at it, 2020, and then you can see the foreclosures, sort of bank repossessions increased 7% from last quarter. And so let's look at the takeaways. I'm sorry, I'm just really tired. Had a long week. I don't feel like reading all this. Nationwide in March 2024, one in every 4,286 had a foreclosure filing. States with the highest foreclosure rates were Illinois, Connecticut, New Jersey, Florida, South Carolina. Property started foreclosure process up 3%. So yeah, if you look at it, and of course this is actually a cool chart. U.S. foreclosure market date by state. So yeah, Alaska's down. US Q1, but so Q1 2023. Oh, okay. So yeah, and then it increased Q4 of 2024. So anyway, I don't feel like getting into all that. One more article. This is another one. The bank problem. Regulators find weakness in living wills from Bank of America, Citi, Goldman, and JP Morgan. There's a regional banking, but this is going to follow the regional banking. Regulators found weaknesses in living wills submitted by four of the country's largest banks, detailing how lenders would wind themselves down if something catastrophic would happen. Those conspiracy theorists are right wing nuts at Yahoo Finance. What a joke. Anytime you talk about bearish news on the US, it's always some sort of info or something. Federal Reserve and Federal Deposit Chairman determined there was a shortcoming in the plan submitted in 2023 by JP Morgan, Bank of America, and Goldman Sachs and Citigroup. Basically, weakness that raises questions of the feasibility of the plan. Two regulators disagreed the severity of the weakness plan submitted by Citigroup. Banks' plans weak enough to be considered a serious deficiency. So they must tell by September how they plan to fix the weakness and address shortcomings resolution in July of 2025. Didn't identify material weakness submitted by other large banks. Of course, they said Fargo, Bank of Mellon, Sesame Street, and Morgan Stanley. So here it is. Living wills emerged in the aftermath of the 2008 financial crisis when the housing market meltdown, unraveling of Lehman Brothers triggered chaos across the financial system, taxpayer bailouts for financial institutions, cascading of series of bank references. So that's pretty much, let's see. Okay, Citigroup regulator said weakness had something to do with identified 2021 plan regarding resolution data, integrity, and management issues. So yeah, that's pretty much. I'm sure there's more, but as you can see, this is all dribble, but yeah, you can see there's a lot of problems, and bank crisis is coming. I don't know when. I don't think it will be this year. Maybe regional bankings, maybe by 2026. I think the commercial real estate, which at minimum, at the late earliest will come in mid 2025. It could be a little bit later. This actually, I'm gonna type this in. And this person is not. I've heard this from a lot of different people. There it is. This is this is Blanchard Gold. I don't know if this gold sale propaganda, but this claims in 2010 Congress passed Dodd-Frank Wall Street Reform and Consumer Act, created provisions for bank bail. So look, this is Fortune. Wow, this is unreal. I'm gonna go click on this real quick. Forget bailouts. Here's how bank bail-ins work. And then they wrote about what is a bail-in. I know what a bail-in is. I lived through Cyprus. If you don't know, that's 2013. So yeah, Cyprus 2013. I was selling gold at the time. So anyway, I'm gonna click off this article. But yeah, that's pretty much all I have to say is that you can see these problems coming from a mile away. Don't have to be some genius. Anyway, if you like this video, hit that like button, subscribe if you haven't, and I will see you next video.